Do you dream to retire before your parents or see minor children under your care retire as millionaires? Then, folks, you are in the right place. Assalamu alaikum and peace be upon you. Welcome to the Muslim Women Invest podcast. I am your host, Dr. Miral Azam Khalil. For the greater part of the past decade, I have invested in the US stock market, US farmland, and real estate, put over 100 families towards creating generational wealth through minor investing. In this podcast, we talk all things money and empower Muslim women to take steps towards financial freedom through busting myths and small, bite sized, actionable steps. So let's begin, starting with the dua of Hazrat Musa alayhi salam, our Prophet Moses. رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقهوا قولي. بسم الله.
Assalamu alaikum everyone. Who's here? Maria, can you hear me? If you can hear me, we can begin. It's 9 o'clock and normally I am prompt, so we're gonna begin. I just want to make sure that whoever is listening can hear me. Okay, assalamu alaikum. So today's topic is a very important one, especially for somebody who wants to invest in the stock market and wants to invest like a day trader, which means that they want to make money short term. My name is Dr. Miral Azam Khalil, and it's a really exciting time, and we'll see how a couple of really big name companies are going to be announcing their earnings, which means they're going to be announcing their profits this particular month, especially these weeks, like Tesla, Netflix, Microsoft. Um, First Solar, United Airlines, to name a few. And so let's begin. Of course, the disclaimer always is that no client relationship is established. All material is copyrighted, it's for educational purposes only, and we are not giving out personalized tax advice or financial advice. So let's begin with the istiyada. A'udhu billahi minash shaitanir rajim. Bismillahir rahmanir rahim. I always begin with the recitation of Surah Al Asr, and why is that? Is because it's a reminder to me and to everyone that everything that we do is based on our intentions according to our religion, and also my hope and my prayer is that we become people who are giving good advice and giving asking people to be patient, and Allah subhanahu wa ta'ala tells us that that is the only way towards success. And Rabbi Shahri Sadri wa Yassirli Amri Wahlul Uqdatam Min Lisani Yafqahu Qawli. I start with Hazrat Musa's dua, and I hope that whatever good I teach you stays with you, and whatever is not beneficial to you, it does not stick with you. Okay, so let's begin. What is an earning? An earning is a company's profit simply given in a given quarter or in a fiscal year. Earnings are typically every 4 months for big companies, and they're after tax net income. So there, it's pretty simple. It's the profit a company is making. All the big name companies like Amazon, Tesla, Microsoft, all of them have a quarterly evaluation of how they are doing earnings wise, what is their how profitable they are. That's basically it. And because they're publicly traded companies, these companies need to tell their shareholders, which could be you, me, or a lot of other people, a lot of other big companies that are shareholders within these companies. They need to announce to the public that what they been doing. Have they been meeting their financial goals, or are they not meeting their financial goals? So why is it important? It's a very good question, and everybody should understand that why should you and I care if Microsoft or Tesla is announcing how did they do profit wise, or did they meet their financial goals this quarter? It's important because this is the single most important thing that is looked at a financial statement. So if you invest in a company, the number one thing an investor will look into is a company's earnings. What are How are they doing financially quarter after quarter? Every 4 months, are they meeting their financial goals? That's how you decide, or that's how anybody decides that this company is worth investing our money in, because they are quarter after quarter meeting their financial goals. And they're also a determining factor of what the stock price for that company is. So basically, a company uses its earnings to, like, honestly, in simply two ways. Number one, it's called a dividend. What the company does, it gives a fraction of that profit back to its shareholders, which is called dividends. It's distributed quarterly, and some companies do it yearly. And the second thing they can do with their profits is reinvest in themselves as a company. So if they have overflowing profits, some companies are going to invest in themselves, and some companies are going to reward their shareholders, and some companies are going to do both. So basically, it's a really important determinant of how it's the determinant of the financial health of a company. What does the term earnings missed means? It's simply that if the analysts, or if people who are following the stock market, they assume that a company is going to make $1 per share and they make 80 cents per share, they have missed, their earnings have been missed, which means that they weren't able to meet the analysts' earnings, or they did not meet their financial goals. Earnings beat, simply if it was estimated that this quarter this company is going to make $1 and it made $1.80, it beat its earnings, which means that it's the simply that they were more profitable than they estimated themselves to be. So simply, what is the term and what is the figure that these companies come up with? So all companies have internal um, audit systems, and they have these checks and balances in place, in which make sure that a company is following a path to success, a company is following its financial path. There is proper accountability of where resources are being used, and if they are being profitable or not, especially for publicly traded companies. Big companies like Microsoft, Tesla, and all of Amazon, these companies have extensive auditing systems, and these are the structures that are able to determine that this quarter we're going to earn this much profit, the next quarter we're going to do this much profit. It honestly depends on labor, it depends on how well they are selling to the public, it depends on um, if they are able to deliver the goods. So there's multiple factors, but normally, if you look at the previous earnings and if you follow the news of the company, you're able to tell if this quarter this company is going to beat its earnings, or if it's going to miss its earnings. So you have to follow the news. Last week and all through my emails, I tell you guys that it is extremely important for you to be able to read um, the news around a company. You need to know what's happening to the company you've invested in. It's mandatory, and this is how you're able to form a holistic opinion that this company is still financially healthy, or if it's deteriorating, or if it's improving. Earnings per share. What is earnings per share? Earnings per share is simply a ratio that shows the company's profitability on a per share basis. So if it has 1 trillion shares, or if it has 100,000 shares, what is the profit per single share? That is the term earnings per share. So what is the profitability of that company per share? Price to earnings. This is an extremely important ratio. Why? Because it's divided as the share price by the earning per share. Why is it important? That if a company has a high PE ratio, and when you compare it with the competitor industries or competitor companies in the same industry, it is considered to be overvalued. It simply means that if the price to earning ratio is really high compared to a similar company that makes similar goods, amongst and on average amongst many companies in the same industry, that means the share price is not uh, accurate, it's overvalued, which means it is not worth the share price. So, for example, it's simply speaking, if the Amazon share is $200, I'm just assuming I don't own Amazon, whatever. If an Amazon company share is $200, and if you look at the analysis at other companies in the same industry doing the same thing and that their shares are close to 150, we will think that the price to earnings ratio is a little high and this company is overvalued, which means that the actual value of their share is not 200 probably. And a lower PE means that the company is undervalued, which means that the company is doing really well. They're meeting their earnings, they're meeting their financial goals. But if you look at other companies who are in the same industry as them and their share prices are higher than this company's share price, and the company is doing well every quarter, this means the company is undervalued. Normally a new company is going to be undervalued because people like to put their money in established companies, you know what I mean? So seasoned investors like Warren Buffett and big hedge fund managers, one of their biggest jobs is to find undervalued companies, because if you can invest in a company that has a really big potential and you can get to it when the share price is really low, you are that company is going to make you a lot of money, because once the public catches up to that awesome company, that company is going to be the share value of that company is already going to be really high. So these are things that you should look at. And how do you get to know about these companies? Again, reading what is happening globally, reading the financial news, reading about new companies, taking a keen interest in what's happening in what's up and coming, you know, which company has recently started public trading. I personally believe that reading, like anything in the world, is the key to success when you're investing. Even it's not mathematics, it's not being a major in finance, it's knowing and having a keen interest in things around you that will make you successful. That is how I have found a lot of companies that have made me a lot of money. Just interest, observation, and a habit to read. Okay, earning manipulation, share buyback and buying a smaller company. Sometimes a company has a really high price to earnings ratio or a low price to earnings ratio. This is a criticism that people do of the earnings. What happens is that a company is sometimes going to try to save itself, and what they do is they give an incorrect depiction of what their earning is. How do they do that? Simply by two things. They can buy a company. If a company is failing, they can simply buy a smaller company, just to show on paper that they're profitable, they have enough money, and they're, you know, expanding. In reality, they are struggling. Share buyback is a very it's a legal way, but it's also a way that earnings can be manipulated. What does that simply mean? Is that buyback is when simply a corporation buybacks its own shares, and they do I put 2 points, but there are many. The first thing they do is they reward their employees. Some of the companies like Microsoft and Tesla, I'm not sure of other, I think Amazon as well, they not a packet they give a package to their employees in which the employees get a certain number of shares of the company as well. This is like a package deal they give to their employees. This is an incentive to work with that particular company. So the company buys back its shares and rewards it to its employees, and gives a share of the company to the employees as an incentive. Number two is simply that they don't want the shares to be floating. So a company buys back its shares so that the share value can be remained. They don't want the shares to be diluted. A third is to honestly show, like, this is where manipulation comes. They want to show to their investors that they have enough cash to buy back shares and they're not in any kind of financial trouble. This is where a buyback can cause, you know, um, a false depiction of the financial health of a company. So, what is earnings season? Earnings season refers to the months of the year where most of the corporate earnings are released to the public. it's an important time for investors because we can look at a company if it has beat its financial goals or if it has missed its financial goals, and we can make an educated choice that do I still want to remain an investor with this particular company? Do I want to keep putting my money in this company, or do I want to take my money away to another company which is more successful? January, April, July, and October, this is where most of the companies are going to report their earnings. We are in July, and this, like I said, this is a month where a lot of companies are going to be reporting their earnings. Let's see which ones are those. A lot of companies are expected to report their earnings, and these are a few companies that I'm interested in: Netflix, Tesla, Mattel. If you don't know, if you're unaware, Mattel is the, I don't know if I'm pronouncing it correctly or wrong, please forgive me, but this company is the one that produces toys like Barbie dolls and Hot Wheels. So why did I put this company? I put this company in because there's a new Barbie movie coming out, and it's going. This particular company, Mattel, whatever, is going to be announcing its earnings on July 26th. With the movie coming out, there's a probability that the share price is going to rise. But this is just an educated guess that I'm doing. I do not follow this company, but I'm just saying that because I follow the news, this company came to my attention because of the news. I am not an active investor, but I'm just going to keep my eye out of how this company performs, and if it does well, maybe I will be an investor. So this is why the earnings season is important. This is just an example to give you. Microsoft, one of my favorite companies. First Solar, another one of my favorite companies. United Airlines, just an example, not a company that I invest in. But these are a few companies that with the July 2023 earnings. Last week, major banks reported all their earnings and they beat their earnings. None of the banks that came out missed an earnings, which means they did really well financially for the I think it was the third quarter, for the third quarter. And now, if you have any questions, you can email me, or this is the time to ask. That is all that I had for you guys. It was a lot of information, but this is a topic that is extremely important and something that can make you quick money. If you are following the news, you can literally put money in the day the company is announcing its earnings and make come out with a huge profit if you have been following the company and if you know that it's strong financially. So any questions, any concerns, any comments, anything that was not clear? Maria, do you have any questions? Okay, perfect. So we are going to end the session. I hope you have a great earnings season. Make and see a lot of big money. Jazakallah khair. See you next week. Assalamualaikum.
I hope you enjoyed the show. Let's end our podcast with a very powerful surah from the Quran. A surah is a chapter of the Quran, and this surah is Surat Al Asr. I started my investing journey and began teaching investing because of this surah. Allah subhanahu wa ta'ala tells us that only people who guide people to the right way, to the truth, and to patience are the ones who are going to be successful. Let's end on this beautiful surah, and I will see you later. Bye from for now, guys.
أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم والعصر إن